Every single day, over $7 trillion is traded in the Forex market. That's not a yearly figure, that's not monthly, that's every single day. To put that in perspective, the New York Stock Exchange, one of the most famous markets in the world, trades around $25 billion a day. The Forex market is roughly 280 times larger, and yet, most people have never even heard of it. In this video, I'm going to break down exactly what Forex trading is, how it works, who's involved, and whether it's something you, as a complete beginner, can actually learn. No jargon, no assumptions, just a clear, simple explanation from the ground up. Let's get into it. Forex stands for foreign exchange. At its most basic level, Forex is simply the process of converting one currency into another. And here's the thing, you've probably already done Forex trading without even realizing it. If you've ever been on holiday abroad and swapped your pounds for euros or your dollars for Thai baht at the airport, that was a Forex transaction. The difference between that and what we're talking about here is scale and intent. When you exchange money at the airport, you're doing it to spend it. When traders participate in the Forex market, they're doing it to make a profit by buying a currency when it's cheap and selling it when it's worth more. So the Forex market is simply a global marketplace where currencies are bought and sold 24 hours a day, 5 days a week, across every time zone in the world. There's no central building, no single stock exchange. It's a decentralized network of banks, institutions, brokers, and individual traders, all connected electronically. Now here's where it gets interesting. In Forex, you never just buy or sell a single currency on its own. You always trade currencies in pairs. Let me explain why. If you want to buy euros, you have to buy them with something. Maybe you're using US dollars to buy euros. That transaction, dollars for euros, creates what's called a currency pair. In this case, EUR/USD. The first currency in the pair is called the base currency. That's the one you're buying. The second is called the quote currency. That's the one you're using to pay for it. So EUR/USD tells you how many US dollars does it cost to buy 1 euro. If EUR/USD is trading at 1.10, that means 1 euro costs $1.10. There are hundreds of currency pairs available to trade, but most beginners focus on what are called the major pairs. These are the most traded, most liquid, and generally easiest to start with. EUR/USD, Euro versus US dollar. GBP/USD, British pound versus US dollar. USD/JPY, US dollar versus Japanese yen. USD/CHF, US dollar versus Swiss franc. These pairs make up the bulk of daily Forex volume, which means they're easy to enter and exit, an important thing when you're starting out. This is the question everyone wants answered, so let's be straight about it. In Forex, you make money by correctly predicting which direction a currency pair's price will move. If you think the euro is going to get stronger against the dollar, you buy EUR/USD. If the price goes up and you sell it higher than where you bought it, you make a profit. If you think the euro is going to get weaker, you can actually sell EUR/USD first and buy it back later at a lower price. This is called going short, and it's one of the things that makes Forex unique. You can profit in both rising and falling markets. Now, and this is important, the price movements in Forex are often tiny. We're talking about fractions of a cent. This is where the concept of a pip comes in. A pip is the smallest standard unit of price movement in Forex. We'll cover pips in much more detail in the next video, but for now just know, small movements, when multiplied by large trade sizes, can add up to meaningful profits or losses. Which brings us to the topic of leverage, another concept we'll explore in depth soon. Leverage allows you to control a large position with a small amount of money. It amplifies both your gains and your losses, so it must be used carefully. For now, just understand the core idea: buy low, sell high, or sell high, buy low. That's the fundamental goal. The Forex market has several types of participants, and understanding them gives you useful context. Central banks, like the Bank of England or the US Federal Reserve, are some of the biggest players. They buy and sell currencies to influence their country's economy and control inflation. When a central bank makes a major announcement, it can move the entire market. Commercial banks, large institutions like Barclays or JP Morgan, trade massive volumes of currency every day, both for clients and on their own accounts. Corporations, multinational companies need to exchange currencies constantly. An American company paying suppliers in Japan needs to convert dollars to yen regularly. Hedge funds and investment firms, professional traders managing billions in capital. And then there's retail traders, that's people like you and me trading through an online broker from a laptop or phone. Retail traders make up a smaller percentage of overall volume, but advances in technology have made it accessible to virtually anyone with an internet connection and a few £100 or dollars to start with. Let's be honest for a moment, because a lot of Forex content online isn't. Forex trading is not a get-rich-quick scheme. Anyone telling you otherwise is either naive or trying to sell you something. The statistics are sobering. A significant portion of retail traders lose money, particularly in the early stages. The reasons are almost always the same: no education, no strategy, and poor risk management. But here's the other side of that coin. The traders who do succeed have something in common too. They treated it seriously. They invested time in learning. They practiced on demo accounts before risking real money. They managed their risk carefully and didn't blow up their accounts chasing big wins. Forex is a skill. Like any skill, driving, coding, playing an instrument, it takes time to learn and practice to develop, but it can be learned. This channel exists to give you that foundation, step by step, in plain English. No fluff, no get-rich promises, just solid education. Forex is the global market for buying and selling currencies, always traded in pairs like EUR/USD. Profit comes from predicting price direction, and the market runs 24 hours a day, 5 days a week. Next time, pips. If this helped, like, subscribe, and tell me what got you into Forex. See you next lesson.